are going live. We are going live for a very, very special episode of Technically Speaking, hosted by your boy, man like me, Mr. Harding. And we've got a very special guest today who's going to be learning, none other than our NFT wizard, the king of Discord himself, highest paid Discord manager on the planet. It's Deco. What up?
Yes, sir. I'm good, man. I'm good.
Good. So, yeah, we are doing this special episode. It's Halloween. So we thought, you know what? Let's do something special. So just before we get into it, obviously we've got to do our disclaimer because we don't want to give out any educational advice. And then you think it's investment advice. It's not investment advice. It's just our opinions, should we say. So here's the disclaimer. All content is for education, information, and entertainment purposes, and should not be considered investment advice. Now, please do not buy, sell, hold any assets or place any trades based on what you see without doing your own research, or without seeking professional advice from a professionally qualified advisor, financial advisor. Because I'm not an accredited financial advisor. Deco, are you an accredited financial advisor?
Nope.
Nope. Didn't think so. Ninja has just joined us. Ninja, are you an accredited financial advisor?
No.
Nope, didn't think so either. So ultimately, all investments do come with risk, so please do your own research. We are not financial advisors and do not intend to be perceived or received as financial advisors. However, we are actually working in collaboration with several accredited advisors. So if you're unable to mitigate your risk, then please contact us immediately so we can refer you to an advisor. So just to show you the lesson plans, this is the website. Here's some of the things that we offer. Here's the lesson plan. It should come up. So you can see that in lesson 3, we actually teach technical analysis and chart reading for beginners. So what we're about to give to you right now is technically a paid lesson. So if you like this and you want more, please go to the website and just click here, create your own learning plan, or just go onto the website and book in a session, and we will be right with you. So I'm gonna make Ninja host whilst I just pump this out to people. There we go. Really?
Oh, I'm the co-host. Okay.
Yeah.
Oh, what? Am I teaching them just live? Oh.
Yeah, we'll bounce back and forth on it.
Oh, yeah, for sure, man. Okay, cool. So on this episode of Technically Speaking, good morning, guys. It is 8:17 a.m. UK time. Hope everyone who celebrated Halloween had a good one. Yes, in this episode of Technically Speaking, we'll be teaching Deco how to do chart reading. Chart reading beginners 101. So
as well.
Let's go. Deco, how are you, sir?
I'm good, man. I ain't doing too bad,
All right, let me just close some tabs that are a bit private. Okay, let's make sure we don't.
Let me get up the slides as well, because there was some slides that we had for this way back when. Let's give people the old slides. Sorry, Deco, you're gonna have to get the old slides. Don't want to quite give away the new ones.
Okay, let me just. Okay, I've closed everything. Yeah, let's go. Okay, so the first thing you want to do when getting to technical analysis is In fact, let's go from zero. Let's go from absolutely zero. So what we're going to do is, instead of showing you the setup, we're gonna go from creating the setup. So we're actually just gonna go from nothing. So let me just let's do it.
You need a trading view account.
So let's go from zero. So the first thing we need to do is go to tradingview.com. Tradingview.com is the #1 website on planet Earth for chart reading and information and data. It is completely free. In fact, I used to pay for TradingView. You know why I stopped paying for TradingView? Because the free version allows you to have 3 indicators. It used to allow you to only have 2 indicators. Don't know if you knew that or not, Mr. Hardin. And I just thought I only ever use 3 indicators, so I stopped paying for the pro version.
Man.
So tradingview.com and then get started. I don't think Shuriken Sounds has a TradingView account, so we will do that. Try free basic. Sign up with Google. As you can see, this is what a complete beginner would do. And I'm going to use the Shuriken Sounds email because I don't believe Shuriken Sounds has a TradingView account. Let me just stop sharing my screen for a second because I don't want to be sharing the Shuriken Sounds password. That would not be good. 1 second. Completely fresh account. Just a sec.
We've got somebody joining us.
I have temporarily forgotten the Shuriken Sounds password, so I'm just gonna go to. By the way, guys, Shuriken Sounds a music subsidiary. It's a multi-Web3 solutions company, a subsidiary of Blockchain Sensei. Please follow us on social media and check out what we've got going over there. Any artists, musicians, get in contact with Shuriken Sounds. Send us a message on Instagram. And any Web3 music people. Okay, so I'm literally just signing up right now. See, I don't want to share the password. Okay, amazing. I've got through. Let me just share my screen again. So again, I went to tradingview.com, which is the #1 website on planet Earth for reading charts. You don't actually trade on TradingView. And I've just signed up via email, just logged in, continue with Shuriken. And in this beginner chart reading session, we will teach you 101 how to read charts. Okay, so once you literally log in with your Gmail or create a username and password, you will come across this screen. Then you just go to products, chart, and then, oh, good morning. Look at all these morning people. Love it. Morning. Okay. Welcome. Congratulations, everybody that made this morning session. We only announced it at 11 p.m. last night on Saturday, which is 9 hours ago. So when greeted with TradingView, you'll typically get this screen. It'll be on Apple. It'll be on the daily time frame. You'll have this thing at the bottom, which is volume, which I'm not saying nobody uses, but we don't really use it at Blockchain Sensei for technical analysis. So the first thing I want you to do when you come across this screen is, now you can put it back later on, but for the way we teach charts, we don't really pay attention to volume, as we're not day traders. We delete the volume. We delete this indicator.
So let's say one of the main reasons we don't use it, just because it's quite controversial to not use it for some people. Right. The reason we don't use it is because in crypto, the volume is manipulated. So there's no point in following the volume if the volume is manipulated. The reason the volume is manipulated is because institutions have bots where they have multiple wallets. So they basically create transactions between themselves with between 100 to maybe even 1 million bots at with some cryptos. making it look like there's loads of transactions when in fact there isn't.
Thank you very much, Mr. Harding. There you go. Now the next thing we teach our students is, you see on the right hand side here where it says Apple AAPL. If you just put your cursor over this bit here, you can drag it up and down. We pretty much pay no attention to this, and if we do, we'll drag it up. But we don't recommend you have it up, just because you see here the watch list where all your assets are. You want to be able to see all your assets, so just grab this and just put it all the way down. As you can see, it's a much nicer view. Then this is completely optional, but at Blockchain Sensei, again, look, we've got the current, pro, and premium. The basic one is more than enough. I use the basic one. The top left-hand corner, you can change the screen from the white view to the black view, light mode to dark mode. We prefer the dark mode, but that is completely optional. And then what we always tell people to do is, you see here where it says D, that means it's a 1 day time frame. That means each one of these candlesticks represents 1 day. Now, what we want to do is we want to change it to M and make the monthly the standard view, because the monthly will teach you how it will show you the long-term trajectory of the asset. Now, how to move around trading view. Okay, so what you got to do is, I'm speaking on behalf of Windows. So I'm sorry, Mac
Who's this?
users. I'm unsure how you do it exactly on Mac. Maybe I can tell you. But so sorry, could we just
I got it.
Yeah, okay, cool. So there are a few very, very important commands. So the first command to be able to maneuver around trading view. Now, again, this is specifically for Windows. So I'm sorry, my Mac users, you're gonna have to Google it, as I don't actually know at the top of my head what the exact functions are, but I'm pretty sure they're similar. So the first function to maneuver is you left click and drag. Left click, hold the left click with your cursor and or mouse and drag. So this is so you can get around trading view. So that's the first step. That's the first control, I guess you would say. If this was a game, right? Anyone who plays games, it obviously tells you press X to jump, press square if you play PlayStation, press square to punch, triangle to duck, right? So right now we're playing on trading view. This is why we do a show called The Game, because we show you how to play the game, right? The game of financial markets. So on trading view, left click, drag up, left click, drag down, left click, drag right. You get the picture. For your cursor and or trackpad, again, this is for Windows. For Mac, can you comment on for Mac? I've never been on trading view on a Mac, so I'm not too sure. Mr. Harding. No, he might make a cup of tea. All right, cool. So the next function of trading view is being able to do this. So basically, being able to make it thicker, and then to make it thicker and to make it thinner. So to make it thicker and thinner, what you do, let me just come on camera. It's much easier to show. So to make it thicker on a trackpad, you do this. And to make it thinner on a trackpad, this is for Windows only, you do this. Right? Thicker, thinner. And then on a mouse, I never use trading view on a mouse. Is it?
I don't know. I don't use it.
Let me test it now.
Scroll down, Mr.
I'll
Harding.
put my mouse in and see how you're doing it. I think it might be scroll wheel, but I'll double checking it.
All right. Do you mind?
Yeah, incoming, bro.
Yeah.
Scroll wheel up and down.
Scroll wheel up and down.
So
wheel.
scroll it up to make it thicker, scroll it down to make it thinner.
Amazing. And then, so the last command you want to learn is making it taller and making it shorter. So making it taller and making it shorter, what you do is you scroll over to this side of the screen, yeah, and then you hold, so scroll over to this side of the screen. You guys can see my cursor, right? My cursor showing.
Yeah.
So hold it down. Again, this is for Windows only. Hold it down with your left, with click. Keep hold of it, and then with the cursor, scroll up. With the cursor, scroll down, and then with the mouse, it'd be the same. So it wouldn't be scroll; it'd be move your mouse. So if you had a mouse, you would left click, move your mouse up, and move your mouse down. Deco, I don't have a mouse. Can you just confirm that?
Yeah, it does.
Is that true?
Yeah. You can click and drag it, and you can use a mouse wheel as well.
Amazing. Now I'm gonna be honest. I went over to my normal trading view because I don't know. I don't know if you can if we can solve this live. I don't know if this is let me just refresh it, because the drag up and down did not appear on this new account, and I don't know why. It should appear straight away. Oh no, it's there. That was just an error. Okay, amazing. Okay, cool. That's fine. All right, so now let's look at how to break. So now you know the 5 commands. I'm gonna say it one more time. So the first command you got to know is, and this applies to Windows, Mac users, you're gonna have to do your own research, is left click on a mouse and or trackpad for a Windows computer. Keep hold of the left click, go up, go down, go left, go right. That's to be able to maneuver on the chart. Second command, make it thicker. Rewind this video if you forget how to make it thicker. Third command is make it thinner. Fourth command is make it taller. Fifth command is make it shorter. That is the 5 commands that you need to play the game of TradingView. So now let's break down the chart. Let's break down the chart.
Let me do this bit.
Sure.
Cool. So what we're going to do is going to go to a set of slides that we've already got. If they load, there we go. Finally, they're loading. Now, there's something that I want to kind of just cover quickly, and this is about market cycles, because it's important to know, and I want to give you extra value here that most people won't give you. So once it actually loads, okay, cool. So this is how money flows. It flows from, and what affects what? The economy affects the market. What is the market? That is your big index funds like the S&P 500 and the NASDAQ. The reasons they affect the next things is because they've got so much money in them, because the majority of people's pensions go straight into the S&P 500. Most companies, when you've got your pension, what they'll do is they'll put it into the market, a FTSE ISA or S&P 500 ISA. So that is the market. Then you have the sector. So each one of these markets has sectors inside of it. So you have sectors like the tech sector, you have sectors like the energy sector, the real estate sector, so on and so forth. Then inside that, you now have the industries. So let's say, for example, inside tech, you could have communications, and inside communications, you'd have a company like Facebook or Twitter. So hopefully that makes sense to everybody. So this is what causes the biggest changes. So if there's a massive change within so say, for example, you're looking at a company, but there's been a massive change within the sector, then you can expect what to happen. you can expect the general direction of that to move with it. So what we have is we have economic cycles. So what happens is technology normally does well first, because technology is an innovation is what drives the markets. Think of innovation as the engine for the markets. Without innovation, you don't have new inventions, and without new inventions, money doesn't really grow. Businesses don't really grow and move forward. They kind of stay stagnant. So this is why innovation is important. Now, innovation normally comes after something really bad has happened. That's when people really get into their bunkers and start thinking of ways to innovate. So after your innovation, we have what we call a boom cycle, and then we have a bust cycle. So what normally expands just before a great decline is healthcare. So we can see here on the right hand side the different areas. Take a screenshot of this, write it down, that will usually expand after each other. So after technology, we normally have capital goods. After capital goods has done really well, energy does really well. After utilities and consumer staples does really well, then financials and consumer cycles will do really well. And this is how the markets move on a big macro scale. So we can see that the different markets have different correlations with each other. So something, again, this is something I normally do in a paid lesson. I want you to take a screenshot of this, and it is very important that on a once a month basis, you check how the different industries are doing from a macro point of view. So you want to look on the monthly, and you want to see which area is up on the monthly and the weekly, and figure out, are communications up? Is energy up? Is healthcare up? Because when one is up, normally another one is down. So they come under different categories. So communication services is XLC. Consumer discretionary, this is basically means things that people spend money on, but they don't need to spend money on, like Nike. That would be consumer discretionary. That's XLY. XLP is consumer staples. This is things like toiletries. Companies like Unilever are in this. So people buying soap, toilet tissue, all this kind of stuff. That's XLP. Energy, obviously, you know what that is. XLE. Financials, XLF. Healthcare, XLV. Industrials, XLI. Materials, XLB. Real estate, XLRE. Technology, XLK. And utilities, XLU. So on TradingView, in a second, I'm going to show you how you add these. So as long as you've got these letters written down, I'm going to show you how you add them, and then how you can add them to your TradingView chart. So there is something called the witching, the VIX, but that's definitely more advanced. Now, this is the Bible. This image right here is the Bible. People often say, oh, Mike, how do you predict the market so often? How do you know what's going to happen? I don't. I just follow the seasons. It's super simple. If something has happened for the last 50 years and for the last 10 years, is it likely that it's going to happen again? Yes, it is. So all you've got to do is follow this roadmap. If you want to get into trading and for trading to the upside on stocks and crypto, it's probably better to do that in October and November, because for the last 50 years, that has been a good time for the markets. Now, in August and September, we can see that that is traditionally times when the markets are down. What happened this year? Exactly that. What happened last year? Exactly that. So when we say, oh, we're expecting this to happen here and there, this is usually why. So we have a little saying, and it goes like this. It is, remember to click the high in November, December, and July. So that basically means you want to take profits in July, because normally after July, August is a bad time. September is a bad time. And you want to take profits in November and October on your long-term investments. Why? Because usually that's when all-time highs are met. Does that make sense? Hopefully it does. Okay, brilliant. So you can see here, do your own research on when the dips are usually. So bull and bear, we won't go over that. So I'm just going to go over, again, we're not going to go over accumulation, absorption phase, and distribution phase. That'll be a paid lesson. So This is important to understand. However, though, in the grand scheme of the markets, we have different time frames. So we have a short swing, which is basically a trade that you're doing for a day to a week. You have a medium swing, which is a trade that you're doing for a week to a year. And then you have a long swing, which is anything you're doing from a year to several years. Now you have different moving averages that will correlate to those different time zones. So I want you to write this down. If you're trading something from a day to a few weeks, that'll be a short swing. That is the 20-day moving average, SMA 20. If you're trading something on the medium term, that is a few days to a few weeks, that would be the 50-day moving average, SMA 50. If you're trading something long-term or it's a long-term investment, you want to pay attention to the 200-day moving average or the 200-week moving average. Please write that down. It's going to become very useful later on. Okay, so what we have is something called the moving average crossover. Now, this right now, what I'm giving to you is absolute gold. Along with dollar cost averaging, this is a technique that is proven to be one of the most successful techniques when it comes to trading. Dollar cost averaging is the most successful technique when it comes to investing, which basically means regardless if the market's up, regardless if the market's down, you just keep investing the same amount every single month or every single week. The moving average crossover is equivalent for that, but for trading. So what it basically means is when the 50 moving average, this blue line here, which I'm going to show you how to activate on TradingView, crosses over the 200 moving average. Now, when it goes the other way, so when the 50 goes above the 200, this is called a golden crossover. Now, here we can see the results of what would happen if you followed this method. If you just waited for the golden crossover, so that's the 50 moving average crossing over the 200 moving average, and that's when you decided to enter things, and then you waited for it to get to the for a take profit point, or for the crossover to happen the opposite way, you can see that you would have a return of 192% in comparison to just holding. So we can see that's a massive, massive difference. That's just using the 200-day moving average. But again, we'll go over that in more detail in a lesson if you want. So the next thing, this is the most essential thing for you to understand on a macro time frame. Not so much on a micro time frame on the daily, but what you want to do is you want to go to the monthly time frame, which we're going to show you how to do very shortly, and on the weekly time frame, and you want to draw in what is called your resistance line. Now, your resistance line, think of it like the ceiling. Think of the price like a ball. It came down and it bounced off the same price twice. And this is your support. And think of it like a floor. So the price comes in, bounces off the floor, goes up, bounces off the floor again, comes back up, bounces off the ceiling, like a resistance. Hopefully that makes sense. Okay, then understanding candles. So those are a few complicated ones. We're not going to go over those. Let's just break down what a candle even means. And we'll do that on TradingView itself. So we can see, I'll go to my industries one here. So what you can do on TradingView is you can create new list. So create new list. I don't know if you can create new lists on the free version.
It's still showing new slides at a minute, Mike.
Oh, it's still showing the slides.
Yeah.
Okay, so what you can do on the free version, because you can't create a new list, is you can just click a tab color. So what I would suggest is you make your the ones that we're going to do now, which is the sectors, as a different tab color. So you can see here what I've done is I've clicked on the sectors. Okay, so here's all my different sectors, X, R, Y, and so on and so forth. So to add something to it, all I would do is add symbol and then type in X, R, Y, okay, just there. Or to add it as a tab, I just select here and choose the color that I want it to be. So we'll go pink, for example. Cool. So let's have a look at a candle on XRY. And let's go to the view and the time frame that you should always be on, which is weekly or monthly to start. And I'm going to remove my Bollinger Bands. And I'm going to remove my RSI. In fact, let me just remove it altogether and add it later. Okay, so how to read a candle. Very important. So it's actually more simple than you think. We do it by colors. So red means down, green means up, quite logically, right? So what this thin part in the middle represents on a candle, this is the range within that time frame. So right now we have to check what time frame we're on. So we're on the weekly. So in the last week, we can see consumer discretionary. In fact, should I do? Yeah, I'll keep it here for now. It closed here. So this is the bottom of the candle. It opened here on this week. But during that week, it opened here at this line, went all the way up to 150, came all the way down to 139, but ended up closing at 140. Now, it's the exact opposite for a green candle, which means it opened here at 141, where this line is. It went all the way up to 150, 148, as we can see, came all the way down to 139, but ended up closing here at 144 in that week. So then if we go monthly, it's the exact same thing, but now it's inside of a month. So if we look at the month of July, what happened is it opened here at 137, went all the way up to 162, or no, higher, 163, that's where the wick is. Came all the way down, and the wick here on this one is just here, 136, but ended up closing at 162. So then that monthly candle, inside that monthly candle was July. So we can see now July, this is what the weekly candles inside that month look like. And inside these weekly candles are these daily candles. So it just breaks it down. Hopefully that made a bit of sense to you. Okay, so then what we have, okay, so that's me done on explaining candles and stuff. So Ninja, do you want to take them through how to actually draw support lines and resistance lines?
Yes, sir. Yes, sir. Let's go. Let's go. Okay. Support and resistance. Oh, so. Okay, so let's go with Apple. Let's go with Apple.
Just gotta show you screen, bro.
Oh, I'm not sharing my screen, my bad. Share my screen, share my screen. Okay, you shared now, right?
Yep.
Cool, so let's have a look at Apple stock. Now, let's do, so we're not doing trend lines, are we? Just support and resistance.
Yeah, just support and resistance.
Okay. Just support and resistance. All right, okay, cool. So again, support is a hypothetical line where we expect there is a probability that prices will bounce up from. Resistance, think of resistance as like a ceiling, and that is a hypothetical line where we expect prices to potentially bounce down from. Now, we start off with mapping out the support and resistance for the monthly, then we go on to the weekly and then the daily. We won't be doing any other smaller time frames, but the same rules apply. Okay, so what we do is we go to this line over here, and then we click horizontal line. And then what we want to do is we want to look for a price point whereby the body of the candlestick, which is the thick part, has touched at least 3 different times. So I'm going to say, now, bear in mind, technical analysis is a mixture of an art and a science. So, no, not do that. So it is subjective. I would say a good support line.
Yeah, that's a great one.
About here. Yeah. And then what we do is with support, we make it green. And then what we do at Blockchain Sensei is that we teach people to do the monthly support lines, typically 2 or 3 PX. I think 3 is good. And then we do
monthly for absolute beginner. I do monthly at 4, just so they know it's the biggest one.
Okay, yeah, cool. Let's do it 4 PX. And then you'll understand as I start doing support and resistance on other time frames, you'll be able to see the difference. So yeah, let's just do it 4 PX for now, make it very, very thick. So we expect that 100 around about, not precisely, but around about $135, around about this area is a price where Apple will bounce up from. Then let's do a resistance. Now here's a cheat code. Instead of going all the way here and pressing horizontal line again, now I'm only speaking to my Windows users, so Mac users, you have to do your research. Left click, and then Control C, Control V, and then you can just copy the line. I suppose if you go to Mac, you just click here, you just click on your line, and then do the hotkey for copy and the hotkey for paste. I don't know what.
Even better one is you can press Alt and H.
Ooh, what? Click this?
No, just press Alt and H anywhere. So you line up where your cursor you want it to be. So go to the top of the.
Yeah. I literally just did it. Okay, cool. You know what? That one's even better. Alt H, and then it copies a line straight on top of your line, and then you drag that line. Yeah, that's good. That's good.
You don't even have to do it that way, you know. You can just literally go to where you want it to be and just press Alt H.
Whoa. Teaching me now, right? So, okay, so if this is the resistance, Alt H. Yeah. Oh my God.
Speedy Gonzalez.
I've let something in, that's amazing. Right, so this is the resistance. So what we expect, okay, what I'm going to do now is that I'm going to get the draw tool. What we expect, obviously support and resistance is not a solid floor or a solid ceiling, but what we expect to happen is for Apple to move around this range, bounce up from here, bounce down from here, and eventually, as it always does, break the all-time high. Not exactly in this pattern, but something along those lines. Now, you can have multiple support and resistances, which is good in the sense that we can always look at the zones in which we expect price to fall down to. For example, if we go through insane economic climates, even stocks like Apple can draw down, can draw down further. Apple is one of the least volatile stocks. From the all-time high, it is 25% down, where a lot of stocks have taken a bit of a bigger beating. Now, what I'm going to do right now is I'm going to create a second resistance line. In fact, I'm going to do it Mr. Harding's way. So let's put it over here. Alt H. Made that red. I mean green. So yeah. So if the price does drop below 135, we can expect the next resistance line that it hits being 124. So the reason why it's good to have resistance lines is because resistance lines are buy zones. So they're places where
I'll just quickly correct you there because you called it a resistance line, support line. It's quite early in the morning, I know.
Yeah, sorry, I'm not on my coffee. Go on, carry on, mate.
Yeah, that's all it was. It's the green lines are support. So floor is support because the floor supports you. The ceiling is resistance because it's resistance. It's hard to, when you bump your head on it, you get knocked back down. That's the best way of thinking about it.
All right, cool. So basically, it supports where you buy, and if you wanted to sell, you do it on your resistance at the top.
Yeah.
If you were going to. All right, cool.
Yeah.
Cool.
And then let's show them how you add the different time frames to the calendar. So click where the M is.
Yeah, let's go
Yeah.
to D.
And then you click the star next to the month, the star next to the daily. Oh, go back to it, Ninja.
Oh, sorry.
Click the star next to the month, or you didn't click the star.
Oh, the star. Sorry, guys. Early one.
Click the star next to the week. Click the star next to the day. There you go. That's the time frames. Now what you'll see is they're all along the top.
Yeah.
Cool. So now let's have a look at what we've done on the weekly time frame.
Okay, so the good thing is about mapping out the monthly first is when you go to the weekly time frame, typically speaking, especially if it's a blue chip asset that moves with the macro market, you can actually see your in this example, which would typically apply to other blue chip assets. In the stock market, like Microsoft, you typically see that the monthly support is kind of in line also with the weekly. But let's break down the weekly as well. Okay, so what we do with the weekly is let's do the weekly support. With the weekly, again, this is just the blockchain sensitive way of doing it. You make the weekly thinner than the monthly. So let's take it down to, oh, good morning, Devon, to 3px. And then we'll make it dashed. So as we can see, this is just blockchain sensitive school of thought. This is not international. We do our weeklies dashed, and we do our monthly support and resistance lined, and then that means that we can easily identify what is a weekly support and what is a monthly support. So
yeah, the thicker the line, so that way when you're looking at it, if it's dotted, you know it's kind of weak, so it can get broken. And then you know if it's dashed, it's a little bit stronger than your dotted one, but you know that your thick one is your strongest support. But when we get a little bit more advanced, this changes over and we start using dotteds for Fibonacci lines and dashed for moving averages and stuff. So it will change. This is just for absolute beginners that we recommend. Dashed for weekly, dotted for daily, and thick ones for support and resistance.
So I'm seeing a support here. Would you agree?
Yep.
So, see, one thing about technical analysis is, especially when you get in, look, even Mr. Harding, who is a goat at technical analysis, will ask for a second opinion from myself, Dom, and Keish. And the reason why that's very important is because somebody can see what you can't see, or you will always have a cognitive bias. We always teach people we always teach retail to think like whales, right? And if the people at institutions do technical analysis together, why would you as a retail investor do technical analysis completely by yourself, in the sense that you can chart up by yourself, but it's always good to have a buddy and say, mate, what do you think of my TA? Do you think this is a good support? Do you think this is a good resistance? And that's why at Blockchain Sensei, we always look at each other's support and resistance, our trend lines, all the beginner stuff that we're teaching you to do. Even we will confirm amongst ourselves. Okay, so anyway, that is one support. Let's see if we can find another one. Okay, so I think this is a good one here.
Yeah, I'd say there's one even lower. So just below those two main supports, you see where all those wicks were touching.
What there?
Lower. In fact, I might be able to annotate and draw on the screen.
Oh, wait. Are you talking about? Oh. Are you talking about here?
Wait, let me know if you can see it on the screen. Oh, you just changed it now. Did my drawing come on your screen?
No, there's no drawing.
Oh, well, everyone else can see it on the main screen. But yeah, it's way lower down.
Trying to get my eyes to see what you're seeing.
Lower down, lower. Below the two main green ones.
Oh, below. Sorry, my bad.
Yeah, there. Boom. You just hovered over it. Yeah, there where you are now. You see it? So where the wicks are.
Oh, like a wick support line, so not a candlestick.
Yeah. So again, guys, something very important to know. I personally like to draw support lines from the wicks on the weekly and monthly, because those wicks on a wick on the monthly is several days of something bouncing. A wick on the weekly could also be several days of something bouncing along a price line, whereas on the daily it's not that strong. So that's where you would use the candle closes. But for a beginner, that's a little bit more advanced. But yeah, that's what I would say is just bear in mind when it's about understanding the time frames. So a wick on a monthly is actually multiple days of movement. So let's show this example by, if you go up to the top, and there's let's zoom in on where we are now, and we'll be able to see that on the daily that's actually multiple days of touches. Yeah. So go to daily.
Yeah. Well, then just go to where I circled.
Yep.
That's kind of another trick, by the way, guys. Use this tool to circle an area, and then when you change time frames, the area is easy to find. Because if I didn't circle this, it would be difficult to find where exactly we are.
Cool. So now that we can see it on the daily, look how many touches that actually is on that support line, that dashed one. And this is one of the big mistakes that retail traders get caught out on, is because they're not using the monthly support and resistances. They think, oh yeah, there's plenty of room for it to go up, but actually there's a massive resistance line there. Or they're like, oh no, it's going to keep going down, but there's actually a massive support line there on the monthly wick, but you just can't see it because you haven't zoomed out to the big picture. That makes sense. Does that make sense, guys?
Yes, thank you.
Yeah.
Okay, so has anybody got any questions so far? Or is everything making sense in creating the trading view account, maneuvering around trading view, making it shorter, thicker, thinner, support resistance? Is that making sense? Is anything not making sense?
Yeah, I'm getting the idea of charts now.
Yeah, it's definitely making sense to me.
Okay,
Brilliant.
amazing.
Let's go on to trend lines.
Wait, should we not do the daily, or should we leave it?
Yeah, we can do a daily support and resistance. Yeah, why not?
Yeah.
Let's do it round about where we are now.
What, here?
Or
the current price?
Actually, that was a good zone where we was. So go back to the.
Okay, so because I think it's good to show people what the daily support and resistance looks like. So I'm going to do daily support and resistance specifically for this zone. Let me just get my brush tool. bear in mind, it is definitely possible for Apple to go back to these zones, because Apple, you know, after coronavirus was around $50. So yeah, let's 1 second.
I swear Apple did a stock split as well.
So we double click, and then what we do is, we change it to dotted, and then we change it to, and we make it thin, so down to 2px. So we know that this is the daily support. Now within this specific range, let's see if we can find one. In fact,
yeah, that was one there where you plonked it.
That was completely by accident. I did not do that on purpose.
It's just 2 touches or more counts as a support line. 2 touches or more counts as a resistance line.
Yeah, we've got 1 touch here. Iterate it. Got touch here. Touch here.
Oh no, I wasn't even looking there. I was looking before. Ignore those. What you've just done. Go over to the left. Oh, to the right of the right. My bad. All the way over, all the way over, all the way over. There, you see those 2 green wicks that touch the support line? Boom and boom. Yeah, so that's a support line. Perfect one.
There you go.
So where it touches, does it need to be like the end of the wick or the body, or is it just if it's in there in general?
So on the daily time frame, it can either be the wick or the close of the candle, but on the daily, preferably the close of the candle. On the weekly, it's the wick.
Yeah, so it's like, would it be where if the line's touching the top and the bottom, or just any part of the wicks in there?
The bottom of it.
All right, cool. Yeah, that makes sense.
And then yeah, now we might as well go on to trend lines because there's a really clear one here. But let's go out to the monthly.
Yeah. Okay.
And now let's do the magic trick, which is go onto the log scale, because this is where people get caught out as well. So the difference between log scale and linear scale is log is a true representation of how the charts actually look. Now, what ends up happening is all of these systems, all of these platforms are designed to take retail money. So that's why they start you off on the 4 hour or the 1 hour so that you can't see the big picture of what's going on. You can't see the big resistance lines. And they start you on the linear. Now, the linear, what it does is it gives a skewed vision. It makes the most recent candles look the biggest and old candles look the smallest. So if Fadlan, if you take the time on the bottom all the way back to like 1980.
Um, 1980, yes.
Yeah, on the bottom. Or let's just go to 2000. So let's get 20 years of data of Apple. There we go. Cool. So that's 20 years of Apple on the log scale. So we can see it's clearly in an uptrend. Now, if you change that to take the log off and look what happens, we'll get a completely different chart. See how it changed?
Mm-hmm.
So that's 1993. Yeah, and then toggle it back on, changed again. Yeah. Just keep it at 1 so that people can see it. Yeah. Yeah, there we go. So this is log on, turn log off.
1 second, putting my headphones in. Yo, can you hear me?
Yeah. Turn log off so they can see the difference.
One sec. Yo, can you guys hear me?
Yeah. So you're just
Alright,
going to
fantastic.
turn log off so they can see it from here.
Yeah.
Oh, no. Keep the chart where it was, like how it was. Yeah.
Mm-hmm.
And now turn the log on. So we need because it doesn't show it properly if you keep moving the time frame. So you got to keep the time frame the same. So
Sorry, got yeah.
So right now we've got from 2009 up until now. So turn the log off.
Mm-hmm. Turn the log off.
Boom. Do you see how the chart changed? Turn it back on. Boom. That is the true chart. And turn off the log so people can see the fake one. That's the fake one. Cool. And now let's go back to log being on. There we go. So what we want to do is we want to use the log to identify our trend lines, because this shows us the true trend of what's happening in the big picture with this asset. So let's draw in a trend line, Ninja.
So this is a super long trend line right now. Well, what we do for trend line is that we click here, and instead of clicking horizontal line, which we do for support and resistance, we click trend line. And then let's do it from how far you want to go, 2013 or even further?
Do the 2013 one first. And again, it's just multiple touches. So we can see there's multiple touches on that trend line. I'll bring it a bit lower. Yeah. Perfect. And again, we're using the wicks because that would be multiple days of touches. Brilliant. So that's that one. And then let's put another one in, the most recent one.
So I'm being distracted by a cat here. What, do you want to come in here? Oh, sorry, 1 second. Just had to let the cat in. Okay, cool. So
go below the wicks. Go below the wicks. Below the wicks. Yeah, there we go. Perfect. Yeah, that's it. Yeah. Okay, and now let's draw in the other trend line. Obviously change the thickness on that one.
yeah, 1 second. So this obviously has room to fall here because we've defied the trend by a lot.
But there's a secondary one that we're going to draw in now.
3px. Yeah, so we're gonna draw like an alternative version, yeah.
Yeah, do it from where the price is now. Yeah.
So here.
Boom. So based on that new trend, if the price doesn't break the support line and the trend line, so this is where you have compounded strength. When you have the price be on a support line and a trend line at the same time, that increases the chances of it moving to the upside, especially on the monthly. So again, monthly support, monthly trend line, that's double the confirmation that it's likely to move to the upside. Brilliant. Okay, cool. So let's now look at this on the weekly. Now, this is literally what you would do for investing, combined with the time zones that we spoke about at the start, the months that you want to pay attention to. Here we can see what you would do is you would wait for it to hit trend. You would do your dollar cost averaging, but when it hits trend lines or support lines, you would add probably a little bit more. That's what I personally do. So I wait for a dollar cost average. I'll be putting in £50 a month into Apple, or £20 a month into Apple. And then when it's hit a support line, that's when I'd put an extra 50 quid in, because it's now more likely to increase in price. Now, what we can do to additionally confirm this is something called the RSI, which is Ninja's favorite indicator.
Yeah. Oh, let me not skip ahead. Let me teach people. So in order to get your first of all, what are indicators? Indicators are tools that we use that, well, the literal use case is is in the title, that indicate something about the chart. So what we do is we click on indicators. For example, well, in this specific example, if something's overvalued or undervalued. So we click on indicators, we type in RSI, which stands for Relative Strength Index. And then, yeah, so
I would go to the indicators again and star it, just because that's a practice beginners need to get into. So,
oh yeah, of course.
You want to star that one. So
yeah.
RSI.
And then hover over it. As you can see, if you hover over any of these, there's a star which appears on the left-hand side, and then star it. This is actually good because I'm literally building TA for the Shuriken Sounds team as well. So 2 birds, 1 stone. Okay, so the RSI is an indicator if something is overvalued or undervalued. If the RSI is over 70, which is conveniently shown with this line over here, it indicates that an asset is overvalued. So when the RSI is over 70, especially when you've got multiple confirmations that it's over 70, for example, here, over 70, over 70, over 70, it's an indication that you might want to consider selling. And when the RSI is under 30, which it is rarely under 30, as you can see, especially on the weekly and the monthly, it's an indication that an asset is undervalued. Therefore, you might want to consider buying. What I like to do is
green light. Yeah.
yeah.
This is Ninja's patented methodology.
Yeah, so I have a methodology called, I call it Ninja's red light, green light, orange light, blue light. So the red light, which would be a sell zone, would be when the RSI is over 70. But you can't always rely on the RSI being over 70, especially for super volatile assets. Let's say Bitcoin, say if you're swing trading. So yeah, there's the red zone, which is the sell zone, which is red light, which is over 70. But then you have an orange zone as well. So an orange zone would be when your RSI is over 60 but under 70. As we can see here in this zone, in fact,
I'd say for beginners, just keep it at red light and green light.
Yeah. Once you get more advanced, you can kind of mess around the 60 to 70 zone, and then the blue light, which would be another buy zone, would be when the RSI is under 40 but over 30. So for example, here, this would be a blue light zone. It's still a buying opportunity because the asset is undervalued, but not. Oh, the cat wants to. Okay, cat. Now you want to get back out. There you go.
Well, yeah, I would say the blue and the orange zones count to the daily time frame. So don't rely on this on the weekly and monthly RSI. Just it's the 70 and 30 zone. That's all you're looking for. If it's above the 7, you have to remember the monthly is a more dramatic view and a more powerful view. So if something is over 70 on the RSI on the monthly, it is crazily overvalued. If it's over 70 on the daily, it's just slightly overvalued. Now, if it's under 30 on the monthly, which basically never happens, that is like an emergency flash sale. That is like, oh my God, this is a crazy bargain. So yeah, show them how to put in the green lights and red lights. So
are you sure they're ready for that?
Yeah, go to the go to the monthly and go to the, just do the 2 highs on the 2 over 70s on the RSI and show them the correlation.
So this is a little bit more advanced, but sure. So yeah, go here to the lines and then click on the vertical line. And then let's just do here. So again, you just click here and then click on the vertical line.
Or Alt V.
Or Alt V. Oh wow, okay. I'm learning something new. Yeah, let's do that. If you're a Mac user, sorry, if you're a Windows user. So over here, Windows users, Alt V. RSI is over 70, and then we make it red, which would indicate sell. This is the red light zone. The RSI here is 81. We've got 81 RSI. Price is here.
Just one final thing I just want to say
correlation.
There. So just let's look at what month that peak happened before it started going down. August. And if you remember the month zones, it said clip the high in July. Just to let you know. Cool. So that's where you do that. So now let's go to the daily.
Mm-hmm. Ooh. Just to let you know, me and Deco, I've got a call with one of our Web3 music partners in 10 minutes.
That's cool. So we can see when the RSI hit the 70, if you mark it in from the most recent areas.
Over here?
Yeah.
Yeah.
Boom.
Oh, no, it's not what I want to do. Go here. Control. Was it Control?
Alt and V. Alt and V.
Alt and V, that's it. Oh, don't want it. Fine.
You can see what happened. Came down. And then if we find areas where it popped below 30 or around 30. Yep, like this.
Yeah.
The most recent one. So the most recent one is literally a golden buy, because what's happened is we've got a touch of a support line, a touch of the trend line, and a low RSI. 3 confirmations. Does that make sense, guys?
Yeah, and then if we just back test it on the daily, look at this. RSI over 70. This would have been a good time to sell. Now, sometimes you want to wait for a call. You want to wait for the confirmation. So the confirmation would be you wait for the RSI to be over 70 again. So for example, here, if you sold here, it wouldn't have been a terrible time to sell because you can still buy back later on. But waiting for the second confirmation, look how high the price is. Imagine if you sold some of your stock here and you just waited for it to go down, and then you just buy.
Cool. So
let's
let's
back again here. So let's do. In fact, let's add a blue. I know it's a little bit.
No, don't do that.
Don't do that.
Let's just go moving average and wrap up. So just show people the moving average.
Yeah, sure. So indicators. Moving average. Then we'll start this.
Click it and then show them how you change it. So at the moment, it's automatically set to the 9-day moving average. Don't ask me why.
It's not what we want.
So you click on where it says MA on the top left. Top left. Top left, yeah. Underneath. Yeah. And, click on that. The gearbox.
Click on settings.
Yeah. And we're going to change that to 200. So where it says length, change that to 200.
Yeah.
And then style, we're going to change this to maximum thickness. So 4 on style.
Yeah.
Yeah. Oh, it's not letting us do it. That's fine. Just press OK. So the rule with this is if the price is below the 200 moving average, it's likely to go down. If the price is above the 200 moving average, it's likely to go up. That's it. So the moving average can act as a resistance line, and that's pretty much how you use it. So let's just wrap up by going to Bitcoin and showing everything that we've just learned on Bitcoin.
Yeah. Scroll down. In fact, let's just teach you for one quick more, another quick thing to add things to your watch. So let's imagine Bitcoin wasn't there. Imagine there was no crypto there. What you do on the watch list, you click this plus sign, and then type in the asset that you want to see. So we want to see BTC. Imagine Bitcoin wasn't there. BTC, and then we can just go for this one's fine. Bitcoin US dollar. Add this.
And what it says on the right hand side is the exchange that it's on.
Yeah. This one's on Bitstamp.
Cool. So we can see right now the price is below the 200 moving average. But if we zoom out, let's see what happened the moment it crossed. So we're talking about this golden cross thing that we was talking about before. What happened the moment the price crossed over the 200 moving average? Clearly skyrocketed. You see that? Yeah, there, that curve area. I'll draw it on the screen as well.
Go on.
So this area here, guys. So we can see it crossed over that 200 moving average. Pew! Same thing happened here.
Coronavirus crash.
So what do we expect to happen here? And what do we have? Let's draw in. Let's go to the monthly first.
Okay, we have to get rid of these now.
Yep. Look at that trend line. Look at it. It's insane.
So the long term Bitcoin. So go here. Here. Trend line. Go for the bottom. Now it has gone off the current. So this was the original trend. Obviously, we've gone below it because this is the thing. Trends have to break at some point. Just like trends in fashion do, just like musical trends, eventually they break. So this was the old trend. And then the new trend. Oh.
Yep. And then I'll change the bottom.
Oh yeah, of course. So come around here.
The wicks, because you're on monthly, so it needs to be the bottoms.
Oh, 1 second. That's what happens when I'm not at breakfast. Let's grab it. Around there.
There you go. Perfect. Now look how clear those touches are. Now what you would do is whack in that support because there's really clear support there, just where the price is bouncing now.
So for support and resistance, remember trend line, the trends, horizontal line for support and resistance. Tita, you've come in super late, but it's cool because the replay is on YouTube.
Yeah, whack that in there.
Oh, let's make that a. Let's make it a. There we go.
Perfect. Now let's go down to the daily and look at the RSIs.
The daily.
And we can see now that we're on the daily, look how many times it's touched that support line. Countless times. But yeah, let's add the RSI and then we're done.
Indicators, RSI is right there without even me needing to type it because I've started.
You can see there was times, multiple times, where the RSI went below 30. We can see the clear area where it was well above 70 for a while. This is when we were telling, this is when we sold. This is when we sold here. Oh. So you can see, if you're doing your TA on the macro scale, things are a bit clear and a bit obvious. See what happened? Price went down. What happened here? Price went down. Now it's below. What's likely to happen? We've got a support touch. We've got a trend line touch. It's likely to go up. If it breaks that 200, woo. Okay, that's pretty much it. Hope everybody took amazing value from everything. I know if Ninja and Deco, you've got to get off. Any last questions from you, Deco?
Oh, that's so good, man.
Yeah, I'm guessing you learned a bit there.
Learned a lot from that, bro. Got hella notes to read through as well. So
No
Yeah,
worries.
good.
It's on YouTube, so you can watch the playback. Yeah, no worries. Amanda, any questions? Hope you took some value.
No, that was great. Thank you guys for that. That's really helpful.
No worries, no worries.
No problem.
Tida, you've just arrived, but you can just watch it back on YouTube. Mina Parmashar, do you any questions? Nope. But Mina's been there from the start. So yeah, let's wrap it up there. Thank you very much, guys.
All right, that is reading charts for beginners 101. And then hopefully through this, when you guys watch our technically speaking series, it's going to make a lot more sense when he's doing all the lines, when Miss Hardy's doing all the lines.
I'm going to drop a technically speaking later on today, so you'll see that on YouTube. So if you're subscribed to the YouTube, you'll see it all.
You should be, and you should have notifications on. Just saying.
Yep. All right, guys. See you in a bit.